Well, this is your Wall Street wake-up call. In a market driven by central banks, Wednesday's Federal Reserve statement takes on extra importance. Let's bring in Michael Ingram now, a market analyst with BGC Partners based in London. So, Michael, it's important for investors to understand what's driving the markets, which is central banks. So, what does the Fed need to say tomorrow to avoid interrupting the record highs we keep seeing in stocks?
Well, Scott, it certainly has to acknowledge that the macro data coming in from the US over the last few weeks has actually been stronger on many measures. The surprise index is the best level it's been in about 18 months. Certainly we had a monstrous NFP number for July, which has slightly changed the perception of where the momentum actually lies. The property market still looks reasonable shape. Manufacturing's had a little bit of a bounce. So the question then becomes, well, at the moment the market thinks that any rate rise is a coin flip for 2016. Do they want to telegraph a hike during the course of the year? And I suspect they're still going to back away from that. They're probably going to highlight geopolitical risks. One thing which is a favorite now is Brexit. It's great to blame us dumb Brits on the world's ills. I wish it were that simple. But that at least gives them political cover for taking a more aggressive stance. But as I said, they say they're data dependent. The data has looked better. The question is to what extent are they prepared to actually telegraph a rate hike later on this year? Remember, they started this year saying that we were likely to hike rates by 4 quarter points during the course of the year. Market thinks it's a coin flip for even one. I think the Fed ultimately is going to want to make up some of that middle ground, because what we're actually seeing is some inflationary pressure actually feeding through, and there is still the perception that the Fed, despite everything else, is actually behind the curve.
Well, and this is the Fed's first meeting since that landmark Brexit vote, so it'll be interesting to hear the reaction there. Now, let's move on to the Bank of Japan. That's on Thursday. What will be acceptable to investors? I mean, if we don't see more stimulus added, does that throw cold water on the thesis out there that central banks are supporting these markets?
Well, I think in terms of central bank policy, Japan really is in ground zero, and that's not a horrible pun. I mean, we saw NIRP at the end of January rebound horribly in terms of the level of the yen. I've often thought that negative interest rates are basically a way of introducing negative carry on the currency. Obviously, we haven't seen the Japanese yen respond accordingly. We saw within the last 24 hours the Japanese Finance Minister Taro Aso really row against much detail on the fiscal stimulus that we're all expecting, and in any event, I mean, the consensus among analysts is that even if it's 20 trillion yen at the upper end, it's at best going to have a short-term impact. So we're left back to monetary policy, and where do we go? The rate of expansion of the central bank balance sheet, we're going to run out of stuff to actually buy, and ultimately there's very little transmission mechanism. So if you want to ask me where central banks are being seen to fail, and of course, monetary policy has really been the only game in town in terms of policy over the last few years. It's the BOJ. So it's be interesting to see how the Fed frames it on tomorrow night, and how the BOJ reacts to it on Friday.
And just very quickly, do you think investors are dismissing earnings right now, which have been better than expected, in favor of focusing on central banks?
Well, I mean, as you know, Scott, I mean, I've always thought that earnings season is a little bit of a bait-and-switch game. Yes, we are, about a third of the way through U.S. earnings season now. Ostensibly, we're looking at about a 5.5% EPS beat, but it's very interesting to see that in terms of both the year-end and 12-month forward EPS estimates, they haven't budged a bit. And I think that speaks to the sort of uncertainty that may lay ahead of us.
All right, Michael Ingram, a market analyst with BGC Partners in London. Michael, thanks for joining us.
My pleasure as always.
I'm Scott Gamm, and you're watching The Street.